Are there specific countries and regions that are concerning for you that may drive us into a global recession?
Well, I'm certainly concerned globally. The large industrial countries are so critical for global growth. IMF head Kristalina Georgieva said over the weekend she thought 1/3 of the world will be in recession this year. I'm sorry. It's closer to 1/2 if you include the US, which I would. And so, it all matters. But if you ask me where I'm most concerned right now, it really starts and ends with the emerging markets, and particularly the commodity importing emerging markets. Why is that? They're more vulnerable. Their debt is higher. They're more subject to sudden stops of capital flows that make it harder for them to finance the policies they have in place. Their policy space, their capacity to use monetary and fiscal policy has been exhausted in response to the pandemic. And now as we enter into the 4th year, they are increasingly constrained and facing populations that are frustrated, angry, and demanding that their needs are being met more comprehensively, and they're not capable of doing it. So I see a significant risk of debt crises. I see a significant risk of high and less well anchored exchange rates. All of that suggests a lot more volatility in the year ahead is the risk.
And then you've got the top risk reports, predicting we're entering a global recession. First, you got to think, what are the global implications of that? And then governing authorities, central banks, they kind of blew it before, as you say. Maybe they had good intentions, but they added fuel to the fire. What do you expect to see on those two fronts?
Well, of course, the most immediate cost of a recession is the lost output. And in the run prior to the pandemic, we were seeing across much of the industrial world in particular, but also in emerging markets, real wage gains. We were seeing really a well-performing global economy with relatively low unemployment rates. A lot of those, and we saw income distribution narrowing in many important countries. A lot of that's been lost. And we've touched on earlier, Ian and Cliff touched on as well, that sense of disillusionment, well, not just north-south, but within economies between low-income consumers that have felt like gains are being pulled away from them. And so I certainly see both economic and political discontent at this extended period of disruption, first COVID, now recession, are really making these policy debates more divisive. Now, turning to the central bank specifically, which is something we're following quite closely, early on in this inflationary spike, there was kind of a shock across the political spectrum. There was broad, I wouldn't say uniform, but not unanimous, but there was broad bipartisan support in most countries for central banks to take a pretty tough line. And you saw the Fed, followed by ECB, Bank of England, and the like, raising rates very aggressively in order to really try and get ahead of this. I think as we head into 2023, for all the reasons we've talked about, these type of decisions are going to become far more politically divisive. Whether or not policymakers, particularly central banks, are pulling back on demand, pulling back in a way that raises the risk of recession, raises the risk of financial crisis, lowers real wages. All of that is going to become much more sharply divided politically, I think, across both the emerging and the industrial world.